In this video, guys, we're going to look at what are your options if an index gaps up or down heavily from a trade setup perspective. Stay tuned. Hey guys, warm welcome to you. So trade setup ideas for big gappers on the indices. There's one recently actually, when the time of filming this, huge big gap, and it really only gives you a few options, and you've got to be very careful that you're not falling into a trap, because sometimes these big gaps feel like a big lovely trapdoor just sitting there waiting for traders to step in and never to be seen again. So you've got to be careful of that, but you've got to respect things at the same time. So first thing, guys, is number one, respect the gap. And what do I mean by that is, listen, if this thing is gapping up, let's say this is yesterday's close here and this is today's open, and it's a big gap, and that would probably, if we look at an index, have had an overnight trade action to it, then you've got to respect the fact that that's bullish. Right, regardless of whether it's going to fade off the open or what trades is going to outcome, you've got to respect that the trend is bullish, and more people have come in on the demand side than the supply side. Demand, supply, it's shifted in the favor of the bulls. That can't be denied because the opening print is now significantly higher. So respect that and be very cautious about fading it except under good conditions. So the options you've got are this. Now, most of the time, you're going to get either one of three scenarios. You're going to get the drive that just runs. If you get the drive, now the trouble with the drive is that most people are too frightened to get on the drive because it's already gapped up massively, and the drive sees it, looking significantly gapped up, even more. So like maybe that's a 200 point gap, and then you've got another 100 point, that's up 350 points. You've got to almost isolate that away from that. Use that as almost a check mark. Okay, bullish, bearish, rather than X amount of points up, X amount of pips up, X% up. You've got to get that out of your head and go, right, well, I need to not think of it in terms of that. Only should I be watching out for any key levels that are from a prior higher time frame. That's what I've got to be watching out. This starts from zero. Almost like the clock gets reset when it has the opening print. And so you could still get a strong, healthy drive and still participate in that drive and not be concerned that it's up too much, that it's up okay, and there's a drive, there's opportunity there. And so the drive is the key one. Buying pullbacks on the drive, getting involved in the drive, won't go to like minute details about them, just keep it broad for now. But that's the first option. Your other option is that when we get the open, is that we get a little push, but then we get a drive down straight away. So it struggles, and maybe it does a double top, maybe it messes around, and it starts to do a little bit of work back into the overnight session. This is where you take your overnight session levels and you start to put some support levels down if you're in an uptrend, for example, and work out where potentially you look to make a bid. Now, you want to respect it. So what does that mean from our perspective? It means that we want to stay on the long side, right? We're respecting it, stay on the long side. So we're looking for bottoming patterns in that gap somewhere to trade off. So this isn't as bullish obviously as that, so we might be looking for some kind of double bottom or whatever it may be, a wick through a low or something. And that'd be something that we trade off, and then we look for a further push up to wherever our extended targets would be. The third one is that the gap starts to get filled. Straight away we start to see aggressive down move. Now, remember rule number one, respect. We've got to be very careful at diving on the short side of this. I've seen these too often, guys, where that looks very good when you isolate that pattern like that. It's a drive, it looks like a bear flag, all the attributes that we'd want. But when you look at it or when you take it, it rips your face clean off because the respect of the gap. It's not gapping up for no reason. Now, does it happen from time to time when the gap just fills? Yes, it does. More often so in stocks than indices, because indices, far more participants are involved in this. But if we're respecting this and we wait for that, that could just be a flush that would come back in. That might just be instant orders at the open, capitalizing on the opening kind of gap up, but there's no continuation. And these peter out very quickly, more likely than not. So in other words, they're not quite like this, which start to push up first and then fail. They're quite aggressive to the downside, and then they'll either do a V-shaped reversal and you see it spike straight back up, or it will just claw and claw and claw and then just start into a trend day, but it's almost like it started the trend day gap down not as much as it was. So be very careful of that. The easy thing to do, guys, is to respect it and say, okay, well, I'm going to align myself along unless this gap is filled. If the gap is filled, then maybe I'm going to allow myself shorts. Now, of course, you might well want to say to yourself, right, well, if we're up X% X ATRs, I'm going to take a counter trend play if I see the right scenario. We're not just talking a stabbing short on a spike here. We're talking about some other thing there. Maybe it's a topping pattern. Maybe it's coming up to a key level after an extension. Then fine. But until it gets there, the respect of the gap and saying, right, I want to align myself with long. Let people get caught up in worrying about the gap fill. If the gap does fill, then that's fine. But generally speaking, guys, when we've got these big gaps, the initial open tends to be in the direction of the gap. The gap could fill later, and that comes under a secondary trade. If we've done all this work and then we start to kind of come down under the VWAP and start to into the close, start to take out the lows, then by all means hammer that thing on the short side to fill the gap. The gap will be filled on a daily and everyone go, well, gaps fill. Well, yeah, but if you'd shorted that off the open, you'd have had to sit through 400 ticks of downside to get your 80 ticks of upside. No good. So you've got to put it in perspective. So this is from an open perspective. What's your options? Generally speaking, I would recommend that, again, this is from my perspective, not a recommendation to trade, recommending it for me, is respecting the gap, looking for a continuation until such time as price action says, no deal, game over, the gap's filled, or further down the line, time-wise, further up, chart-wise. All right, guys, take care. See you next one. Bye-bye.